verdict in the Sam Bankman-Fried FTX case, being found guilty on 7 counts of fraud. We'd love to hear your reaction to that ruling and what it potentially means for the crypto industry going forward.
I think it's an important milestone in the growth and the maturation of the industry. The crypto industry has been plagued by inexperienced entrepreneurs like Sam, unreliable custodians like FTX, incompetent creditors, a dozen went bankrupt in the last year or two, unscrupulous promoters. And their failure is a necessary rite of passage for an industry that's going to lead to a new, more stable, more scalable ecosystem that'll be based on Bitcoin. Public companies like Block, MicroStrategy, Marathon, a dozen Bitcoin miners that are public, institutional money managers like Fidelity and BlackRock, and regulated banks when they eventually become custodians. The offshore crypto exchanges, the stable coins, the crypto tokens, the DeFi projects, they're going to shrink, fade into the background, and decouple from mainstream and institutional digital assets marketplace that'll be based on Bitcoin.
And Michael, you bring up BlackRock, you bring up Fidelity, and of course, both of those firms have applications in for a spot U.S. Bitcoin ETF, something that hasn't been approved yet, but there's a lot of speculation, a lot of optimism that it could be soon. What would that mean for MicroStrategy, given that, I mean, you've been on the record too saying that MicroStrategy shares are a proxy for Bitcoin. If you're able to get that through a physically backed ETF, would that lessen the premium that MicroStrategy enjoys?
I think it's critical for there to be a spot ETF for mainstream retail investors and mainstream institutional investors to participate. So it's going to lay a base layer that's going to allow large amounts of capital to flow into the industry. MicroStrategy is a special investment vehicle for Bitcoin long bulls. We're different from an ETF because we don't charge a fee. We can use intelligent leverage. We borrowed $2.2 billion at 1.6% interest to buy Bitcoin. And we can generate a tax-deferred Bitcoin premium either by using cash purchases or by capital markets activity. So we're not for everybody, and in sovereign wealth funds that want to buy $50 billion worth of Bitcoin can't fit into the MicroStrategy capital structure. But if you want leverage and this tax-deferred yield and no fee, then we're an interesting alternative for people in the space.
With regards, though, to building up that position, that crypto position even further than what you have, does the introduction of those ETFs, would that create competition to increase asset sizes, excuse me?
I think it's going to help everybody in the space. They're going to accelerate education efforts and adoption. Already you can see Fidelity analysts are making a huge impact on the digital asset space. So as you see Wall Street analysts from all these ETF firms and you see their education and marketing efforts come into the space, and as they provide the rails for traditional institutional investors and endowments and the like to engage, they're going to expand the entire ecosystem. But they're not an operating company. They can't take on leverage. They can't not charge a fee. I mean, we literally don't charge a fee. And they can't engage in cash purchases with operating income like we can in order to generate that tax-deferred Bitcoin premium.
It's interesting, too, to see some of the moves in Bitcoin this year. Obviously, the volatility is still there, but not necessarily to the extremes that we saw in prior years. And I'm wondering if the introduction or the broadening out of the user base will reintroduce that volatility, or have we kind of moved past that? Are we kind of in a different era now?
Well, I think we've reached a nice point, but you know, when Bitcoin passed $100,000 to $200,000, maybe it'll trade from $250,000 down to $175,000, and people are going to be screaming the end again. Bitcoin is compounding at 40 to 50% annualized growth rate for the past 3.25 years since MicroStrategy got into the space, with a lot of volatility. I think an analyst, Timmer from Fidelity, pointed out it is got the highest volatility of any asset, but it's also got the greatest return. And so, as I've said in the past, volatility is vitality. I'd rather have the volatility and the performance than get rid of the volatility. Gold's not volatile, but it's also down 1% in 3.25 years. So that's not what we're looking for.
Well, Michael, I want to talk a little bit more about the user base of crypto. Who's actually buying? Because, of course, if you take a look at the trading market, you've seen trading volume absolutely fall off a cliff. And the narrative I keep hearing is that you've had all these retail players flushed out after what we saw with FTX a year ago. So maybe a spot Bitcoin ETF is in the offing, but do you think that that would actually bring back in those marginal buyers, those retail players, or have they been burned too badly?
Yeah, I think that during this crypto meltdown, the crypto bros offshore and the leveraged hedge funds, they exited the space. They were all bankrupted for the most part. Right now, the natural buyers in the space are Bitcoin hodlers, the maximalists, the people that are sweeping their incremental cash flows into Bitcoin. It's almost impossible, very difficult for mainstream investors and mainstream retail to buy Bitcoin because there are just very few on-ramps. So the natural sellers are the miners, the natural buyers are the hodlers. The trading volume has diminished quite a bit. This is the lull before the storm. Once we get these ETFs in place, that will open up the gateway for mainstream retail and mainstream institutional capital to flow. And the halving in April is going to cut the available supply in half, and it's going to eliminate half of the natural selling. So this next 4-month period is very pivotal to the asset class.
I want to talk to you about your own Bitcoin holdings, and I have a very detailed question for you. I have to give credit to Tom Quintiliano in our newsroom for this. If you take a look at page 21 of the latest 10Q, it mentions that MicroStrategy could raise just over $600 million in an ATM equity offering. Is that something you're thinking about tapping? You take a look at the shares right now, they're up over 200% year to date. Could you use that to add more to your Bitcoin funds here?
We have raised more than $1 billion in the past via ATM offerings, and whenever we did it, it was accretive to our shareholders. This $600 million vehicle will allow us to engage in more capital markets activity. As we're selling stock at a premium and then buying the underlying Bitcoin, we're capturing a tax-deferred Bitcoin premium for our common stock shareholders. So we're very thoughtful about when we do that and how we do that. And sometimes we'll do it, sometimes we won't. It depends on market conditions and, and where everything trades.